Let's start with what actually happened in the market yesterday. So gold fell for 1.1% on the day, closing around 4440. That is gold dripping for about $50 in a single session. So why did gold fall? Three reasons. First, central banks turned hawkish. That means major banks around the world, including the US Federal Reserve, are signaling they will keep interest rate higher for longer. Second, oil prices were rising. Higher oil means higher inflation fears, and higher inflation fears push central banks to raise rates even more higher, and that is bad cycle for gold. Third, US job data came in strong. The ADP report and jobs figures both pointed to an accelerating labor market. A strong economy means the Fed has no reason to cut rates. Again, bad for gold. So yesterday, gold was under pressure from all three sides at once. That is why we closed near $4440 and why the buyers coming into today is slightly bearish. Now here is where it gets interesting because overnight the news shifted. Story number one, Strait of Hormuz. Trump confirmed this morning that most Iranian mines in the Strait of Hormuz have been cleared and the waterway could reopen. When Strait of Hormuz is blocked, oil prices spikes, which creates inflation fears that was previously pushing money into gold as a safe haven. Now, that threat is easing. Beyond the News today has two economic data releases that can move gold significantly. First is the jobless claims. This tells us how many Americans filed for unemployment last week. If the number is higher than expected, more people losing jobs. That means the economy is cooling. The Fed may cut rates sooner. That weakens the dollar and lifts gold. Potential for bullish flip. Second is the non-farm productivity data. If workers are producing more per hour, it reduces inflation pressure and can give the Fed room to ease. That is also positive for gold. But tomorrow, we get the big one, which is the NFP, the official job reports. So today's data is actually the warm-up act that sets the tone heading into Friday. Now let's take a look at the chart. I promise I'll keep this simple. Back to our original mapping as how we predicted for the price to continue its bullish movement, and price literally tapped onto our 4425.75 reversal price point, and right now we could clearly see there is a bullish reversal candle on H4 time frame and also multiple of bullish reversal candle on H1 time frame. So what I would suggest is you can have two plans, two views for the current price action. Right now, we can expect for the price to continue its bullish movement from the current price point. That's number one. Number two, we can also expect for the price to drop all the way to our H4 bullish reversal candle and give us some sort of a confirmation for the price to be pushed to the upper side. Because at the moment right now, price did tap onto our reversal price point, but then again, none of the prices managed to break from this channeling trend line. Hence why, if you guys would like to participate any bullish reversal opportunities, I would suggest for you guys to wait for a clearer break of structure or for a clearer formation. Alright guys, so at the moment right now, we are still aiming for a solid buy all the way to the upside on the macro buyers. However, for today, micro buyers, we are still aiming for the price to continue its bearish movement. Unless if you get to see a clearer structure breakout all the way to the upper side. Alright guys, so this is the formation that we would like to look for today. And of course, the candle that we'll be looking to execute for today is bullish reversal candle. Alright guys, our bias remains the same. We'll update you guys inside our purple house if there is any new update. So y'all take care, trade safe. Assalamualaikum.